All right, welcome. Today we're going to break down the one thing, the single most overlooked step to passing a prop firm evaluation. And here's the kicker. It has almost nothing to do with your actual trading strategy. So, let's jump right in. I mean, the dream is so compelling, right? Trading a six-figure account, maybe even more. Prop firms offer this golden ticket. They put up the capital, you bring the strategy, and boom, the potential for some really life-changing returns. It feels like the ultimate shortcut for a good trader. But for way too many traders, this is the reality. The dream just slams to a halt with that big, red, frustrating evaluation failed message. And what's crazy is that a lot of the time, it's not because you had a bad week or your strategy blew up. Nope, it's because of a simple hidden trap that was waiting for you from day one. So, here it is, the most common trap. It isn't the crazy market swings. It's not even a bad strategy. It's failing because you broke a rule you didn't even know was there. Think about that. You've basically failed the test before you've even placed your first real trade. So how do you sidestep this thing? Well, it's not about finding some magic new indicator or tweaking your entry signals. The real solution is a whole new process. You have to stop thinking like a customer who's just buying an account. Instead, start thinking like a professional pilot before takeoff. Someone who goes through a meticulous, non-negotiable pre-flight checklist. Okay, so let's actually walk through that pre-purchase checklist. This is exactly what the pros do to make absolutely sure their strategy even works with the firm's system before they spend a single dollar on the fee. First things first, and this is the absolute most important part. You have to understand the rules of the game. And I'm not talking about suggestions or guidelines. These are the hard-coded, rock-solid parameters that decide if you pass or fail. Honestly, ignoring them is like trying to play chess without even knowing how the pieces are allowed to move. It's a guaranteed loss. All right, you have to burn these three things into your brain: the daily loss limit, the total drawdown, and any kind of lot size or risk limits. These are the big ones. If you breach any of them, even by a single penny, that's it. It's an instant fail. Your evaluation is over right then and there. No do-overs, no please let me try again. It's game over. And it goes way deeper than just the loss limits. Think about your own strategy for a second. Do you trade during big news events like NFP or CPI? Do you like to hold positions over the weekend? A lot of firms flat out ban these kinds of things. You've got to dig into that fine print and make sure the way you trade is even allowed in the first place. Okay, now let's get to the part everyone really cares about, right? The money, getting paid. Because passing the evaluation is just step one. Actually seeing a payout in your bank account, well, that means clearing a whole second set of rules. And this table really shows it. Hitting that profit target is like only half the battle. You also might have to trade for a minimum number of days. Or, and this is a big one, follow a consistency rule, meaning you can't have one lucky massive trade make up your entire profit. And of course, you need to know when you're actually getting paid. Is it every 2 weeks, every month? That's kind of crucial for, paying your bills. And let's not forget, you're putting your own money on the line here right up front. The average fee can be around $500, sometimes more. And this is where we get to a really critical shift in how you need to think about what that fee actually is. Okay, here's that crucial mindset shift I was talking about. You are not buying an account. That's the wrong way to look at it. What you're doing is paying an application fee to take a test. It's a cost for the firm to select and vet serious traders. They're using it as a filter. And when you see it that way, man, it changes the entire game. So all of this, it all builds up to the final and honestly, the most important takeaway of this whole thing. It's about changing your perspective, completely transforming your approach from, a hopeful gambler to a calculated professional strategist. And this quote really just nails it perfectly. Reviewing the rules is not about finding flaws. It is an act of preparation and risk management. That's it right there. You're not trying to find a loophole or game the system. You're doing your homework, you're preparing, you're managing your own risk before you even start. Because at the end of the day, this isn't about passing one little test. It's about finding a business partner, a firm whose rules and systems actually fit with the way you trade. What you're really doing is making a calculated investment in your own trading career. So, the next time you're on a prop firm website and your mouse is hovering over that buy button, just stop. Stop for a second and ask yourself this one last really critical question. And you have to be brutally honest with yourself. Because the answer you give could literally be the difference between another failed attempt and finally getting funded.